algorithmic animal patterns. It has no affinity for Elliott wave. It doesn't even know what Elliott wave is. It's not keeping count of the waves. Okay. It's not doing all that shit. It has nothing to do with Wyckoff. Nothing. Supply and demand is an illusion. In commodities, it's a real factor. That's a real market. It's real. It's the world's grocery store. There's a real supply and demand for corn. There's a real supply and demand for wheat, for gold. But there really is no supply and demand for S&P. So it has to be what? Engineered. And it's all manipulation. It's gyrating and moving around, just like the currencies, which has no real supply and demand factors associated either. So when you put down your alma mater for a few moments and just take a step back and think about it, we're all watching price go through the ticker tape all day long. That's equivalent to the cards shuffling at a table we're all sitting at trying to play our hand. But amongst all of us, there's a mechanic. That hand that you don't see, that's running the cards the way they want those cards ran. They're calling the pace. They're calling the shots. They know how to make your hand look good enough for you to play it, and you'll plunk your money down, and then they're going to run you. They'll ante up. You'll ante up because you feel like you got a strong hand. You got kings and aces. That's a great hand. Well, it's really not that great a hand. I need to know, where is the buy side and the sell side? Then I just know the rest of the order. I know the PD array matrix at that moment. I know what is likely to be used in price, but the price may print something. It may not give me a breaker. It may just give me a fair value gap. It may just give me an order block. It may just give me a propulsion candle. But there's so many things ICT. How do you know? Because it's only going to present one or two things. That's it. That's the benefit of learning everything I'm teaching you, because if you're going to be a one-trick pony, you can make money. Yes, you can just do breakers. Yes, you can do the model I taught last year on YouTube. They work. It works. I'm not limited to that. Neither should you be. Once you learn how to do last year's model, which is this year's model, that model is wonderful, but hopefully it'll provide you the calmness not to rush to learn to do everything right away. Just let it happen. I didn't learn all this stuff in 1 week. I didn't learn it in 1 year. It took a lot of time. And you're going to find that you're going to wrestle with yourself. And some of you probably go into this, and you probably watched some of my videos in the past and said, I'm going to master the breaker. I'm going to master the fair value gap now. I'm going to master institutional order flow entry drill. And you're finding difficulty with it. And you're second guessing yourself. Well, maybe it doesn't work as well as I thought it did. No, you're just trying to push too fast, too hard. And maybe that PD array is probably not your forte. Maybe there's another one that's easier. Visually, I think that breakers and fair value gaps are the easiest one to see. But when we're watching price, and it's moving around, gyrating around, that's equivalent to every trader sitting at the table watching the deck get shuffled. Looks fair, right? Everybody's watching the same price. We're all watching ICT talk about the real-time data in ES. Those candles are moving around. The market's being shuffled. And then finally, I'm counting cards. Not candles. I'm not counting candles. I'm counting cards. And I'm going to see when that hand is perfect for me to bet against, because I'm running the deck up. Who's running price? I'm running price. I'm waiting for a specific thing to occur. And then I'll ante up. I'll pyramid, add more to the pot, add more to the pot. Letting retail traders feel like they got a chance. I annotate it in my charts. Retail's wanting to sell short. Retail has their stops here. I'm anteing up. I'm wanting that wrestling match between retail logic traders and their harmonic patterns to wrestle me, which is the market. and the market wins. The hyenas laugh for a moment. They get a little nip. But eventually the lion stands up and tears their ass up. And you have 41.93 delivered. You have 41.80 delivered. 41.76 and a quarter delivered. All under the basis of accumulation in the SMT divergence between the NASDAQ lows and the ES lows. That was the stage. I was setting you up for the idea that this is all under accumulation. It's sloppy in price delivery. Yes. Yes. That was the whole point. It's ugly. You have to know what it looks like. Wrestle through that while you're learning. And then if you're wise, you'll say, I'm not going to trade today. Wait a minute, ICT. If you wouldn't have traded today, you couldn't have called those moves. You're right. And guess what? I don't give a shit. Because these types of moves happen all the time. That's the problem. When you are not versed in what's actually going on and how often this repeats. I mean, I've spent every day with you. Am I deleting tweets? Am I calling things that are outside the delivery of your own chart? How many times do I have to say and show and prove before I can really get you to understand that this is not random? It's not random. I just can't speak as freely as I want to. I want to say all kinds of things, but I can't. So I have to talk like this, which many times frustrates some of you, and you get angry, like I'm doing it to be funny, or I'm toying with you. I'm not. I wish I could just talk openly. I can't, though. I have to stay within the language I've created. That's the only thing that keeps me safe. 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 So when you think, but I worked at this firm, we were told that this is what happens, and we see the order flow coming in. You're watching cards being shuffled. You're sitting at the table. You're just right next to the dealer, shuffling the cards. And you're going to call yourself the market maker. You're neither. You're not a dealer. You're not a market maker. You're a participant. You're a player at the card table. Price is coming and going whether you deal in it, trade in it or not. It's equivalent to when you miss a move. You may have seen, 41.80 is going to happen. 41.93, I saw that coming, ICT. Before you even mentioned it early this morning, I knew it was coming. That's great. It's wonderful. If you don't take a trade on it, what's it feel like afterwards? Well, I saw it coming, but you didn't do anything with it. That price was going there regardless. It was going there regardless of whether ICT mentioned it or not. If ICT would have slept in today, and admittedly, I wish it would have. I'm tired. It would have delivered that. I explained to you where it was going to go, why it will go there, because that's where the orders were. Buy side was resting above that 41.92 relative to the daily chart. Why should it have gone there? Because that's where large funds are. That's where the liquidity is. The algorithm is coded to go to those intermediate term highs like that on a daily chart. In that way, it allows the market to absorb and utilize that liquidity that will be invariably resting above that. It has nothing to do with buying and selling pressure. It has nothing to do with it. Zero, zilch, nada. It is not a factor. You ever play, my youngest son, he had this game on his phone. Admittedly, I was addicted to playing it once he showed it to me. I just don't remember what the hell the name of it was. It was like this little worm thing or snake or something like that. And you steer it around and you eat all these dots, but you can't touch another snake, or you can't touch the edge of the area you're playing in, or you have to start all over. And the more dots you eat, the longer your snake becomes. So in a lot of ways, and I tried to communicate to my son when he was playing, I said, price is just like that snake game, where it just goes around constantly eating liquidity in bigger moves. And like, look at the chart today from 9:30 to now on a 1 minute chart. That's a snake. Okay, that's grown. Every new candle has consumed liquidity. It's moved to an inefficiency and it moved into liquidity. That's all price is doing. That's all it's doing. It's predetermined. It's going to be doing whatever it's designed to do from midnight in New York local time. It's established. That's the way it works. And I don't give a fuck who doesn't believe it. I don't care. But I'm not going to arm wrestle any of you past this day today. I'm not. I don't care. You either see it or you don't. You don't want to subscribe to the view that it's algorithmically driven and you just want to trust the things I'm teaching you? Great. You'll do no harm to yourself by doing that. But I'm tired of these fucking clowns, okay? These idiots on fucking social media making videos pretending they have a fucking clue. They have no idea what they're talking about. Zero. And to the professionals that are amongst you, I appreciate the respect and candor that you've shown me, even though you may disagree with it. But I promise you, what you think you know, that's not it. That is not it.